Why are spot ETFs superior? They're superior because you actually have to own the asset. It's like GBTC, the trust. It's not an ETF, it's a trust, but they actually have to have the BTC in custody, in the trust, in order to issue the shares. If you can print an asset out of thin air, it makes the value go down. And that is kind of what happens in currency markets. It's why currencies consistently go down and why we experience inflation.
In a recent interview, Mark Yusko, a pro-Bitcoin American hedge fund manager, shared his thoughts on spot Bitcoin ETF. During the interview, Yusko emphasized the significance of a Bitcoin spot ETF and explained that these spot ETFs are regarded as superior because they demand real asset ownership. The SEC recently extended its review period for a slew of spot Bitcoin ETF applications until at least mid-October. Anticipation had been building among traders ahead of these decisions, particularly after cryptocurrency asset manager Grayscale's legal victory over the SEC, which compelled the SEC to re-evaluate Grayscale's proposal to transform its flagship GBTC fund into a full-fledged spot Bitcoin ETF. Asian emerging market currencies bore the brunt of a strong dollar on Tuesday, with most trading at multi-month lows as the greenback touched fresh highs on expectations the Federal Reserve would keep U.S. interest rates elevated for longer. Underlying U.S. inflation moderated in August, with the annual rise in prices excluding food and energy falling below 4.0% for the first time in more than 2 years. The battle against inflation is, however, far from being won, as the report from the Commerce Department on Friday showed overall prices were still elevated, partly due to higher gasoline prices. While the economy remains strong, consumer spending is slowing, which combined with cooling underlying price pressures raised hopes that the U.S. central bank will not hike interest rates in November. During the interview, Yusko asserted that the belief that inflation is beneficial is questionable. U.S. Treasury Secretary Janet Yellen said on Tuesday, "I am very optimistic about the U.S. economic outlook. Short-term, inflation is coming down in the context of an extremely strong labor market." Now, let's direct our attention towards the few clips from interview.
If you have a choice as the approver, as the regulator, as the gatekeeper, as the traffic cop, there are lots of applications for spot ETFs, and there's lots of applications for spot Bitcoin ETFs. Now, why are spot ETFs superior? They're superior because you actually have to own the asset. It's like GBTC, the trust. It's not an ETF, it's a trust, but they actually have to have the BTC in custody, in the trust, in order to issue the shares. That's not what happens in futures. You can just say, yeah, knock yourself out. Go long all these paper contracts. I'll just make more. It's like the old Doritos commercial. Go ahead and eat them. We'll make more. And that causes an imbalance. And when the paper asset, when the proportion of paper assets relative to physical assets in any market, and you can go back and look at oil, you can look at soybeans, you can look at corn, you can look at, any asset, when the paper ratio to physical gets out of whack, bad things happen. And it makes sense that a paper good printed out of thin air, what are you talking about here? That happens in other markets, that currency, right? If you can print an asset out of thin air, it makes the value go down. And that is kind of what happens in currency markets. It's why currencies consistently go down and why we experience inflation. But what it really is a theft of your wealth through the devaluation of the asset you use to procure goods and services. And I saw this Twitter war the other day. I'm never going to call it X, by the way. This Twitter war, where two guys were trying to debate this construct that inflation is good for you. Like, on what planet? I mean, really? Have you been brainwashed that badly? Because just think about it. If I have $1 And over a period of 30 years, that 2% per year, it's now worth 50 cents of purchasing power. How is that good for me? I toiled for $1 and now I have less than $1 of purchasing power. How is that good for me? Now you say, oh, but your income went up. Look at the history. For the average person, that ain't true. Your income goes up far less than your purchasing power is eroded. For the people at the tippy top, awesome. The all-seeing eye, right? Those people love inflation. Might be why they invented it.
Governments and central banks fear losing control of money to this new breed of private digital cash. In the interview, Yusko mentioned that although financialization has benefits, paper futures markets have a track record of vulnerability to manipulation, potentially harming those not in favor. He pointed to the approval of the Bitcoin futures ETF in November 2021 as an example of this phenomenon. Bitcoin futures ETFs already exist, led by the ProShares Bitcoin Strategy ETF, which holds about $900 million in assets. The fund has slightly lagged the price of spot Bitcoin since inception in 2021, when Bitcoin was near an all-time high. Now, let's direct our attention towards the few clips from interview.
When you can go short an asset without having to own the asset, what doesn't matter what it is, whether it's oil, whether it's gold, whether it's molybdenum, whether it's Bitcoin or now ETH, that's a bad thing because naked shorting is not allowed in traditional spot markets. And spot is not exactly the right term, but in the stock market, you're not allowed to naked short. Right? You actually have to have the stock in order to short it. And same thing with a barrel of oil. In the olden days, if I wanted to trade you a barrel of oil, I had to have a barrel of oil. I couldn't just make up a little piece of paper that said, oh yeah, if I happen to have a barrel of oil on this date, I will get it to you. It's actually kind of BS. And I get it that financialization has some positives, but paper futures markets have a long history of enabling manipulation, and they make a lot of money for the people producing the paper and destroy a lot of people on the other side. So maybe I'm not as big a fan of futures markets as other people, but what is going to happen is large institutions now can short Ethereum the same way they shorted Bitcoin, November 21, right? Almost to the day of the peak. They approved the Bitcoin futures ETF and it got $1 billion overnight. And everybody's like, oh, that's so great. I'm like, well, think about it. For every buyer, there's a seller. And guess what? There can even be more bigger sellers on the other side pushing that incremental trade the wrong direction. And once that cascade starts because of high frequency and because of the machines, those machines will just start chopping the bids. And it's just history says it's not a good thing for short-term price. History says it's not a good thing for free and open markets because it allows people with large balance sheets to manipulate. And I use the term manipulate intentionally because they've paid massive fines. They, meaning these large institutions, have paid massive fines, like hundreds of billions of dollars without admitting guilt. I always loved that part. How the hell do you pay $1 billion fine, but you get to say, but I'm not guilty? Just the fact that you paid $1 billion says that you're guilty, right? I mean, otherwise you wouldn't pay.
Currently, ETFs pegged on spot Bitcoin prices haven't been approved by the SEC. Getting the SEC's approval for a spot Bitcoin ETF would be net positive for the entire cryptocurrency market, the currencies, as well as the exchanges that facilitate trading in them. While it primarily offers benefits such as portfolio diversification, a hedge against inflation, and a long-term store of value, it also bridges the gap between traditional investors and the digital currency realm, enabling them to gain exposure without direct ownership. That wraps up our discussion for today. Feel free to share your thoughts in the comment section below. If you find this content informative, do not forget to give a thumbs up and hit the subscribe button for latest updates. Thanks for joining us.